On today's episode, we are going to take a look at Chinese companies and the main reason that all these companies seem to be down in the past few days. After that, I'm also going to talk about my top 4 companies and just describe what I like about them. So let's get started. So like I mentioned, right, today's episode, we're pretty much going to talk about this bill that's going around, and there's a lot of articles and a lot of clickbait articles that are scaring off investors into Chinese stocks. Obviously, there are some risks in Chinese stocks that I will mention later on, but today I really wanted to get the information of what was happening, what was this bill, and how this bill will affect Chinese companies. After that, the 4 companies I'm going to take a look at are Alibaba, Huya, Tencent, and Baidu. And if you guys want me to take a look at any of these companies, I'm going to do just a quick overview of what they do, their most recent earnings, and how their valuation is at the moment. But if you guys want me to do a full analysis on any of these companies, make sure to post on the comments like I did for Spotify, like I did for Nvidia. Both of these videos I've done in the past 2 days, and I have gotten a lot of support from you guys. So I'm sure you guys are enjoying them. So let me know which one of these 4 companies you guys want me to do, and just let me know in the comments. If it was up to me, I really do like Huya and Tencent. I did do a video on Baidu, so actually you guys can check that out. Alibaba just did earnings today, so I know some people might want that one too. So like I said, post in the comments, and don't forget guys to hit that subscribe button, the bell, and the thumbs up. It helps the small channel out so much, and I truly appreciate it. Alright, so the first thing we're going to talk about is the United States recently passed a bill that could cause many Chinese companies to delist their stocks from the American exchange. And this is the main reason this sell-off is happening. But just by reading, just if I was to say that one part, it could seem like things are a bad thing. But I do think the bill is pretty good. And I'm reading this article from The Motley Fool, and the article is created by Leo Sun. And the article is read this before selling all your United States listed Chinese stocks. And definitely, if you guys want to learn more, I definitely recommend taking a look at this article. But I highlighted all the important information that I grabbed from it. And this bill is going to do the following, and I think it's actually a pretty good thing, especially with all the fraudulent that we keep seeing in Chinese companies. So right now, we recently saw Luckin Coffee with their fraudulent. GDX I think was just accused. We saw TAL as well. All these big companies have been accused or have shown some form of fraudulent. And I think this is the bill is going to require companies to certify that they're not owned or controlled by foreign governments, and it's going to require the SEC to bar companies that have been opened their books to the Public Accounting Oversight Board for 3 consecutive years. So what is this Company Accounting Oversight Board, PCAOB? This is a non-profit watchdog that oversees the audits of public companies. Unlike most foreign companies that list in the United States, Chinese companies don't allow the PCAOB to oversee their audits. And honestly, that to me is mind-blowing, right? I feel like, and I do believe this bill is actually going to provide really good for investors, right? Because we saw all that fraudulent happening with all these other stocks, and investors are losing a lot of money. What this is going to help out is Chinese companies that back then did not have to report to the PCAOB, and the PCAOB did not have to oversee their audits. It gave them a little bit more leeway to actually fudge the numbers around. I'm not saying all Chinese companies do this, right? That's not what I'm saying. But I'm saying it did allow the possibility for them to have a little bit more leeway of faking those numbers. And now with this is actually going to take away that leeway, and hopefully we'll see more honest results and audits from these companies. And I'm not saying don't invest in Chinese stocks, right? I am an investor in certain Chinese companies. I own Huya, for example. I own Tencent, and I owned a very small portion in Baidu. But I do understand that there is risk with owning these companies because of this. And for that reasons, I think it's important to mitigate your risk. And obviously, if you do, for example, a full position in a United States company, the full position for Chinese companies might be smaller. So it's always important to mitigate your risk. But at the end of the day, I understand those risks. So that's why my full positions are usually smaller than those of my United States companies. But at the same time, I don't want to take, these are great companies that I believe they're in markets that will excel. So I'm not going to lose out just because of my mindset that, hey, all Chinese companies are bad. No, that is definitely not the case. And I do think that's what's causing a huge sell-off right now, that people are just selling off because they're worried their position will be removed from the exchange. But before removing from the exchange, there's actually a few things that these Chinese companies can do. The first thing they can do is they can actually voluntarily delist themselves from the United States market, and you can find them, and they can just simply change their symbols and move to the over-the-counter markets. And this is not something that's new, right? For example, Tencent is one of my favorite positions, and this is actually not in the in any American exchange. It's actually an over-the-counter OTC market. So I can purchase them over the counter, and certain platforms don't allow you to do that. I don't know if Robinhood has Tencent on them, but for example, the application that I use, the platform that I use is Fidelity, and they allow you to purchase over the counter companies. Same with, I'm pretty sure all the big guys like TD, Ameritrade will also have this ability as well. And normally one of the downside of over-the-counter exchanges is they have usually a lower volume rate than the main NASDAQ and New York Stock Exchange. But the main reason is, like I mentioned, most platforms don't allow for these types of over-the-counter like Robinhood and maybe all the other smaller ones, so it reduces the volume size. But I feel like Tencent has a high volume. I think I have it opened up here. And here we can see Tencent, which is an over-the-counter stock. Its average volume is about 5 million shares. So that's actually pretty big compared to most companies that we see. Some are even in the low thousands. So 5 million is very active. So as long as the company is pretty big, I still believe we will see high volumes on them. So if we do see some of these companies delisting and moving to over-the-counter market, I don't think it's a bad thing. And especially if you are in a broker with Fidelity, nothing will really much change. It's just going to change the exchange it uses. But if you are in a form of platform like Robinhood, since Robinhood I don't think allows Tencent, it will most likely force you to liquidize your position because you won't really be able to own that position over the counter. The second possibility I think is the scarier one, but I don't think it's as likely, and we're going to see why. The second possibility is a buyout. The company could make a tender offer for its outstanding US shares and take itself private, and then after it takes itself private, it can relist itself in stocks in another exchange outside of the United States. This outcome could pretty much hurt United States investor because the tender offer could significantly undervalue the company, right? If they say, hey, I'm only willing to pay X amount of dollars for these shares when they're really valued right now at Y, it would obviously cause the stock price to drop down because, hey, if this company is willing to pay less for its shares, then why wouldn't everybody else will, and would cause the stock price to go down. The only thing is, this is actually a very low likely scenario because the outcome of this, there's so many American shares for these companies that the companies would require a lot of cash to buy out the existing investors, and just building up that cash is a very low probability to happen. And not only is just the average investor going to be affected by this, they do expect huge resistance from huge United States companies and funds. Because there's a lot of American companies and a lot of big funds that either have positions in that have some form of stake in these companies. For example, Alphabet, which is Google, and Walmart both own big stakes in JD.com. Investment juggernauts like BlackRock and Vanguard are among Alibaba's and Baidu's top shareholders. So these are companies, all these four companies, right? Alphabet, Walmart, BlackRock, and Vanguard are companies with money, and money talks. So I do there will see some form of resistance because of this. And just this article says that investors should keep tabs on the bill's progress, but they mentioned that they shouldn't expect major companies like Baidu, Alibaba, JD, Tencent, well, Tencent's already over the counter, to really delist their shares. And there was an article earlier on this week that they said that Baidu CEO was saying that they're gonna delist their shares from the United States, and the CEO, Robin Li, was like, no, that's not true, that's not gonna happen. But they did leave doors open for a secondary listing in Hong Kong. So for me, what does this article mean? I mean, what does this bill mean? To me, this bill I don't think it's a bad thing. I think the bill is a great thing. And for big companies like Alibaba, like JD, like Baidu, like Tencent, even though Tencent's not in the, I keep saying Tencent, but Tencent isn't over the counter already. There's not really, I feel like these companies are so big, and obviously I don't want to say they're too big to fall, but the likeliness, right, the percentage wise, I think are a lot lower. I think this bill will really affect smaller companies or really growing companies that are growing and that are showing crazy growth. So maybe I would expect maybe to see some form of a probably downside on Huya, and I do think Huya has seen the biggest downside of all of these. But I do think it's a great thing because yes, investors are getting burned by all these fraudulence, and it's pretty crazy that Chinese companies did not allow an oversight on their audits, and this is something that is definitely needed. So I do think the bill is great, and I do think it will help out investors, and I don't see much of a change for bigger companies. And to be honest, I think I might take advantage of this. I did today purchase a few more shares of Tencent, and depending on Alibaba, if you guys want me to take a look at that company, I might do research on Alibaba, and that one's also down. So I might take advantage right now and buy on these stocks. But like I said, right, there is always that risk, and I understand of that risk. So for that reason, I usually buy smaller positions. So it's always to understand the risk that you do when you invest in these companies. All right, so now I've talked enough about this bill and what it's doing, and what's the main purpose of it. So now let me talk about these 4 companies that I'm looking at. So the first company is Baba. Baba, in the past 6 months, I usually compare it to February 20th, is down about 7%. And this is actually pretty crazy for me to see, because Alibaba is pretty much an e-commerce company. Many people consider it the Amazon of China. And e-commerce, as we've seen here in the United States, have seen huge growth, right? Amazon is one that's up pretty big, and any company, Walmart is up pretty big because of their e-commerce growth. So it's actually pretty crazy to see this company down 7% compared to February 20th. Their most recent earning, and one thing about Alibaba, right? I also want to talk about what kind of positions they do. So Alibaba has different markets. They have their core market, which makes up most of their revenue, and this is their e-commerce market and their commerce market. So pretty much all online stores and regular stores. They also have clouding computing. Clouding computing is also something we see Amazon doing, and this is seeing 62% year-to-year growth, which is a very strong market that I believe in. The next, they're also into digital media and entertainment. Again, a smaller portion, but it is up 12%. So these are the main things that Alibaba is in, and the major businesses. So I do think it's important to understand what these companies do. And in the most recent earnings, this company reported $1.30 in non-GAAP earnings per share and a revenue of $16.1 billion. Both beat expectations, and revenue is actually up 22% compared to the same time last year. So Alibaba is doing good growth. So it's actually pretty crazy to see this company actually being down compared to February 20th, when much other e-commerce business are up. The next company I want to take a look at is Huya, and Huya is actually one of my favorite companies, and this is an esports company. Let's just take a look at stock price performance from February 20th. This company is down about 26%, so it has taken a big haircut. Let's just talk about Huya. Huya, what it does, it's pretty much a streaming, it's the #1 game live streaming platform in China. And if you guys know anything about my channel, I am very bullish on esports. And not just, and when you think about esports, I do think it's the sectors that support esports, the ones that are going to make the biggest returns. And streaming, I do believe it's one of them. So Huya does is pretty much like the Twitch of Amazon. If you guys know anything about streaming platforms, they are like the Twitch of Amazon. They're like the YouTube gaming of Google. They're like the Facebook gaming of Facebook. So they are pretty good, and I do think this type of market is going to grow pretty strong in overseas in China. So that's what Huya does. Their most recent earnings per share, they beat estimations of non-GAAP earnings per share, and the revenue was up 47% compared to the same time last year. So another big grower. Next, we're going to take a look at Tencent, and Tencent is actually on my left eye. I think Huya and Tencent are both equally my favorite. Tencent, if we compare it to February 20th, this company is up about 1% only. That's actually pretty crazy. So I did open up a position on Tencent, not open up, I did add to my position in Tencent today. And this company is down 4% today. And Tencent is a company that holds in a lot of different portions of different companies, and especially in the esports. So here, if we take a look at their PowerPoint presentation for their most recent earnings, they talk about they're in online games, they're in media, they're in fintech, they're in cloud, they're in utilities, they're in communication and social. So they're in all different types of platforms. And if you keep scrolling, for example, in the video game industry, they're in big companies like Riot Games. If you guys are into e-games, you guys are gonna know most of these. They're into Riot Games. Riot Games just released Vanguard, I think it's called, the game Valorant, which is doing amazing. They have a huge portion in Epic Games. I want to say they own about 50% of Epic Games. Epic Games has the game that's doing crazy right now. It's Fortnite. They have Tcehy, which is another great platform. It is I forget, Taiwanese company or South Korean company. I forget what market it is, but again, a very big esports company. They're also in Dojo and Huya are both esports streaming platforms. So this is a company that if you want to just go into overall esports, Tencent is the one. And like I mentioned, they are in those other businesses like they are in WeChat, QQ, they are in utilities, clouding, fintech, media, and everything else. So I do think they are very, very diversified. And if there was just one company to really much enter the whole Chinese market, I do think Tencent is the one. Tencent's most recent earnings were revenue beat by 26% year to year. So we can see these are growing companies. So heavy double-digit growth. The final company I'm going to take a look at is Baidu. And Baidu, I did do a video on them. And this company, since February 20th, is down about 21%. So this is another one that has taken a big haircut. Baidu is pretty much the Google of China. And the main reason I talk about is you're going to see, right, Baidu has this platform called IQG, which is pretty much YouTube, right? They have a YouTube platform. Then they have Baidu Search, they have Baidu Maps, they have Baidu Applications, they have all these types of different Baidu Cloud. So they're pretty much the Google of China. And another reason I am bullish, so all of these are in markets I'm bullish in. Oh, excuse me. I'm bullish in esports, I'm bullish in clouding, I'm bullish in entertainment. And all of these sectors, all of these companies, and e-commerce, which are all of these 4 companies, and all of these are the leading ones in China. And Baidu's most recent earnings per share did see a revenue decline of about 11%. This is one of those that is not showing revenue growth. But with Baidu Cloud, we did see strong growth. And I did do an episode on Baidu, so definitely check that out if you guys enjoy it. So that's it for this episode, guys. I hope you guys enjoy it. I actually learned a lot, and this is why I love doing these videos. I learn from them, and I get to talk about my thoughts, and it helps me with my thought process. So not only am I providing information to you guys, it also ends up helping me, and that's how I know I'm providing great value. So don't forget to hit that subscribe, guys. Don't forget to hit the thumbs up, and don't forget to let me know in the comments which one of these 4 companies you guys want me to take a look at. So take care, guys. Have a good day, not good night, because this one's going to be up probably this afternoon, and see you next time.